Imagine a form of money that exists only on the internet, can be sent anywhere in the world within minutes, and operates without a bank or government controlling it. This is Bitcoin. Bitcoin is the world's first decentralized digital currency. It was introduced in 2009 by a mysterious person or group known as Satoshi Nakamoto. Unlike traditional currencies such as the dollar, euro, or rupee, Bitcoin exists entirely in digital form. There are no physical coins or notes. Instead, every transaction is recorded on a technology called blockchain. When Bitcoin was first launched, very few people understood its potential. In 2010, a programmer famously spent 10,000 Bitcoins on 2 pizzas. At the time it seemed like a normal purchase, but today those Bitcoins would be worth hundreds of millions of dollars. Over the years, Bitcoin transformed from an experimental internet currency into a global financial asset that has attracted investors, businesses, and even governments. Some people view it as the future of money, while others consider it a revolutionary investment. But what exactly makes Bitcoin special? To understand Bitcoin, we first need to understand how traditional financial systems work. Whenever you transfer money using a bank, the bank acts as a middleman. It verifies the transaction, records it, and ensures that the money reaches the intended recipient. Bitcoin removes this middleman entirely. Instead of relying on a central authority, Bitcoin operates on a decentralized network of computers spread across the world. These computers work together to verify and record transactions. Every transaction is stored on a public digital ledger known as the blockchain. Think of the blockchain as a giant digital record book that is shared across thousands of computers. Every time a transaction occurs, it is verified by the network and added to the blockchain permanently. One of Bitcoin's most important features is transparency. Anyone can view transactions on the blockchain, but personal identities remain hidden behind digital wallet addresses. Another unique feature of Bitcoin is its limited supply. Unlike traditional currencies, which governments can print in large quantities, Bitcoin has a fixed maximum supply of only 21 million coins. No more than 21 million Bitcoins will ever exist. This scarcity is one of the reasons many investors refer to Bitcoin as digital gold. New Bitcoins enter circulation through a process known as mining. Mining involves powerful computers solving complex mathematical problems. When a problem is successfully solved, a new block of transactions is added to the blockchain, and the miner receives Bitcoin as a reward. Mining plays a crucial role in maintaining the security and integrity of the Bitcoin network. Because transactions are verified through cryptography and distributed across thousands of computers, altering the blockchain is extremely difficult. This makes Bitcoin one of the most secure digital financial systems ever created. Now let's look at some of the advantages of Bitcoin. One major advantage is global accessibility. Anyone with an internet connection can send or receive Bitcoin regardless of location. There is no need for a bank account or financial institution. Another advantage is speed. International bank transfers can take several days to process, while Bitcoin transactions can often be completed much faster. Bitcoin also operates 24 hours a day, 7 days a week. Unlike traditional banking systems, there are no weekends, holidays, or business hours. Security is another major benefit. The blockchain uses advanced cryptographic techniques to protect transactions and prevent fraud. Bitcoin can also provide financial access to people living in regions where banking services are limited or unavailable. In recent years, many investors have started viewing Bitcoin as a store of value. Similar to gold, they believe Bitcoin can protect wealth against inflation and economic uncertainty. Today, Bitcoin is used for investment, online payments, international money transfers, and financial innovation. However, despite its advantages, Bitcoin also faces several challenges. One of the biggest concerns is price volatility. The value of Bitcoin can rise or fall dramatically within a short period. While some investors have earned significant profits, others have experienced substantial losses. This volatility makes Bitcoin less practical as an everyday currency in some situations. Another challenge involves regulation. Governments around the world are still developing rules and policies regarding cryptocurrencies. Some countries have embraced Bitcoin, while others have imposed restrictions or bans. Regulatory decisions can significantly affect Bitcoin's adoption and market value. Energy consumption is another frequently discussed issue. Bitcoin mining requires enormous amounts of computational power, which consumes large quantities of electricity. Critics argue that this creates environmental concerns. Security risks also exist for users. While the Bitcoin network itself is highly secure, individuals can lose access to their funds if they forget their wallet credentials or become victims of scams and cyber attacks. Despite these challenges, Bitcoin continues to grow and evolve. Major financial institutions, technology companies, and investment firms have increasingly recognized Bitcoin as an important asset. Many experts believe Bitcoin could play a significant role in the future of finance. Some see it becoming a global digital reserve asset, while others view it as the foundation for a decentralized financial system that reduces reliance on traditional intermediaries. The future remains uncertain, but one thing is clear: Bitcoin has already changed the way people think about money. For the first time in history, individuals can transfer value across the globe without relying on a central authority. Whether Bitcoin eventually becomes the world's preferred digital currency or remains primarily an investment asset, its impact on technology and finance is undeniable. In conclusion, Bitcoin is much more than just a cryptocurrency. It is a technological innovation that introduced a new approach to money, ownership, and financial freedom. Powered by blockchain technology and protected by cryptography, Bitcoin has inspired an entire industry and sparked a global conversation about the future of finance. More than a decade after its creation, Bitcoin remains one of the most influential inventions of the digital age. Thank you for watching. If you found this video informative, don't forget to like, share, and subscribe for more videos about technology, innovation, and the future of finance.